Don't buy an ETF until you watch this. I'll show you step by step how to do research and build an ETF portfolio that fits your goals. You don't want to miss this, and I wish I knew what I know now when I first started investing. Hi, my name is Eddie, and I've been a property and shares investor since 2009. In this video, I will talk about why invest in ETF over individual shares, which free website you can do all your research, and how to pick the right ETF based on your risk tolerance, and I will provide some examples. Just a quick disclaimer. Please remember, this video is only for general guide and education only, and always do your own research. Why would you invest in ETF in the first place? Reason number one, it gives you exposure to multiple companies in one trade. This allows you to buy multiple overseas companies, multiple Australian companies, and gives you instant diversification in one single trade. Reason number two, it's easy to purchase. You buy ETF like you buy any individual shares using an online broker. Reason number three, it gives you broad range of investment strategies. For example, you can buy IVV to get exposure to the US S&P 500 index. You can buy VHY that gives you exposure to Australian companies that pays very high dividend. Or you can buy thematic ETF that gives you exposure to AI. We will discuss about this in detail next. You've heard about investing in ETF that can earn you 10% or more than 15% per annum in return. So you're definitely excited about that. And how do you find out more? And how do you do your own research? So I will show you how to do your own research and pick the right ETF for you. So firstly, go to morningstar.com.au. This is a wonderful website, and you can spend hours and hours in this website to do your research. So morningstar.com.au, go to investments, investment ideas, and you go down, security type, ETFs, Australian ETFs. So there's 493 ETF. Let's have a look at the full list. So there's over 400, close to 500 ETF. Now, click on yield, cost, and performance. What I want you to do is to sort the 5 years annualized return. So highest at the top. As you can see here, ETF FANG, FANG, have the highest 5 years annualized. So annualized means that 26.32% per annum return over 5 years period. And you can see what is the 3 years annualized, 1 year annualized, and the year to date return. Okay, so FANG, GDX is next, and it all continues. You got the yield percentage here, which is the distribution that your ETF provider will pay you every year. You got the total cost ratio. So this is the fee that your ETF charge you every year. So 0.35% per annum. That's the fee per annum that the ETF charge you. So what I notice is that if it is an actively managed ETF, you'll have higher fee because you've got managers behind the scene that invest in the ETF. And the passive ETF, the ones that invest in the index fund, they have a lot lower fee. Now let's look at the name. If you look at the top one, FANG, FANG, that's the ticker symbol. That's the ETF ticker symbol. So if you want to buy this ETF, you go to your online broker and you would search for this name or this symbol FANG if you want to purchase FANG. So if you look at the name Global X FANG Plus ETF, so Global X is the ETF provider. Same thing here. VanEck is the ETF provider. BetaShares, iShares, they're all the ETF provider. And in the name itself, it tells you um, what are all the various companies that the ETF investing in. So FANG looks like this ETF is investing in the Mag 7 US tech stock. So FANG, Facebook, Amazon, Nvidia, Google, plus all the other US tech companies. That's why they put a plus in there. So same thing here, gold minus silver. iShares Global 100. When you say, from the name itself, you know that it is investing in the top 100 global companies. BetaShares geared US equity complex. Anything that have geared or complex, it means that it borrows money for more of a amplified or geared return. And obviously on the downside, um, if the stock market is not doing well, the losses will be amplified. So I sort by 5 years annualized return because at the end of the day, you want to pick ETF that gives you the most return. I find that 5 years means that the ETF has been around for more than 5 years, so it's trusted. When you look at past return, doesn't necessarily translate to future return, but it gives you a good guide. And what you need to look for is, like, I give you an example here with gold. Gold has been doing extremely well. So the 5 years annualized in this case with the gold minus is 24%. And you can just have a look at what is the 3 years annualized, the 1 year annualized, and the year to date return. And from here, I can see that the past year, the year to date return is very high. So that's why the 5 years annualized return is more than 24%. The question that you have to ask yourself is that with gold price being so high now, will the next 5 years give you the same return? Yeah, I'm not sure. So that's the question that you have to ask yourself. There are a lot of thematic ETF here at the on the top of the list. Thematic ETF means that the ETF is investing in companies based on a theme. Like for example, FANG, it invests in the Magnificent 7 US stock. Gold is another thematic. It invests in gold only. But I do like IOO that invests in the global top 100 ETF. So that's thematic ETF. And if we go down here, if I look at IVV, so IVV is they invest in the S&P 500, the top 500 US companies. So this is more of an index fund. So you are fully diversified because you've got 500 companies in there, and you can see the fees is quite low, only 0.04% per annum. So I do like IVV as well. You've got ETF, which is hedged or currency hedged. What it means that it doesn't consider the fluctuation of the exchange rate. So it only looks at the underlying asset, the company that they invest in. You've got in the name itself, anything that says active means that it is actively managed. So it's managed by fund managers, and usually the rate is higher as well than the passively managed ETF, like your index fund ETF, for example, IVV has a lower fee. This website gives you a really good insight on performance, the total cost ratio, or the fees, and the yearly distribution or the yield. Next up, you want to drill down on the ETF that you like to do more research by going to their provider website. You want to know the objective of the ETF and the underlying holdings or companies that makes up the ETF. So we will look at FANG first because we are curious. It's at the top of the list. And then we'll look at two of my favorite ETF, IVV and VHY. So let's look at FANG. Just search in Google FANG ASX, and we go to the FANG provider website. So Global X is the provider. Let's click on FANG ETF to find out more about it. So, like I mentioned before, you want to understand what the ETF is all about. Global X seeks to invest in companies at the leading edge of next generation technology that includes household names and newcomers. So we've seen the cost from the Morningstar website. So AUM, which is the assets under management, is the total pool of money invested in this ETF. So 1 billion plus. Let's keep on going down. Reasons to consider. FANG is designed to be a core building block for growth oriented portfolio. Let's go down. We can have a look at the fund overview. Seeks to provide investment results that correspond generally to the price and yield performance. Let's have a look. So what's important here is the cost 0.35% per annum. It's not currency hedged. Domicile in Australia. So this is important. If you live in Australia, you want to pick or buy an ETF that is domicile in Australia for tax purposes. So it's easier for you to pay your Australian tax. Let's take a symbol. Keep on going down. Okay, we know about the performance. We've seen it, but this is in the form of a chart. Okay, so this is the important one, the holdings and the characteristics. So you can see what are all the top holdings. Okay, so FANG Plus, these are all the companies that makes up FANG. Alphabet, Broadcom, Apple, Nvidia, Amazon, all the tech giant. Let's move along and look at one of my favorite ETF, IVV ETF ASX. So you search that in Google and we go to the provider website. So iShares S&P 500 ETF IVV BlackRock is the provider. Why IVV? Exposure to large established US companies, low cost access to the top 500, US stock. So pretty much this ETF, it tracks the top 500 US index. So let's keep on going down the performance. Okay, so we've seen this in the Morningstar website as well. Let's keep on going to key facts. Management fee is only 0.04. Distribution frequency quarterly, and then you've seen the distribution percentage in the Morningstar website, or you can click on the fact sheet. Usually it tells you there as well. What's important is just have a look again here. Domicile in Australia, which is good. Easier for you to do your tax return every year. Let's keep on going down and just have a look at the underlying holdings. Okay, you can see the top 10 holdings, but you want to look at the underlying holdings that list all the companies. Nvidia, it has to wait as well, so 7.47% investing in Nvidia, and so forth. See, it's pretty much the top 500 US companies. Okay, so McDonald's. And lastly, let's look at VHY. VHY ETFs. Okay, so VHY, the provider is Vanguard Australia. So we just keep on going down and actually pick the VHY. So you go to the right website. Okay. Vanguard, one of the well-known ETF provider, well-known investment company. VHY. Let's have a look at management fee, 0.25%. AUM. Let's look at the investment objective. So this is important. VHY ETF seeks to track the return of the FTSE Australia High Dividend Yield Index before taking into account fees, expenses, and tax. What's the benefit? It's an efficient way to capture long-term market performance. It's low cost. Let's look at the top holdings. So if you look at the top holdings, all the big banks and the big miners. So we know that the big banks and the big miners, they pay high dividend. That's the reason why the dividend yield of VHY is high, or the distribution yield is high, which is good. With VHY, not only it gives you high dividends relative to other ETF, but it gives you growth as well, because it is investing in top Australian companies. Okay, so the performance in the form of a graph. Let's go back to morningstar.com.au, where you want to compare the ETF that you like, and also compare the ETF with some of your favorite individual stocks in the form of a chart, so it's easier for you to understand their performance. So morningstar.com.au. Let's look at IVV. Make sure you pick the right one. So ICS S&P 500 ETF. Okay, you come to this main page, then go to chart. So this is the 1 day total return of IVV. You want to have a look at least 5 years. You can put a start date and the end date if you want. You want to see the 10 years performance. For example, you can put a start date and end date. Let's compare IVV against VHY. Let's pick the right one. VHY, the Australian shares, the high yield index ETF. As you can see, IVV well outperform VHY. But just hang on a sec. This is important. You click down on data type. Okay. So it has growth only. You want to pick growth with dividend, which will give you the total return of your share price with dividend included. Okay, let's click away. And you can see now the performance between VHY and IVV. Because VHY pays a lot more dividends than IVV, the 5 years performance is a lot closer now. Let's compare against some well-known Australian companies. Let's look at CBA, Commonwealth Bank. Make sure you pick the right one. CBA Australian. Let's look at Macquarie Group, Macquarie Bank, Australian. Let's look at Rio Tinto, mining company, Australian. And look at car sales or car group. Okay, make sure you pick the right one. Car group, Australian. At the top of the chart, you can see the total return, IVV 125%, VHY 85, CBA 137, Macquarie Group 73, Rio Tinto 102, and Car Group 78. As you can see, I'll be extremely happy if I invest in ETF IVV and VHY. It will outperform some of the well-known company in Australia. And what's important is make sure you also invest in the overseas market, in the overseas company. And you can do this easily by purchasing an Aussie ETF that invest in the overseas market. Now that you know how to research ETFs, the key metrics in picking up the right ETF should be number one, performance, number two, key objective, number three, what companies you're investing in. Is it overseas company or Australian companies? And lastly, number four, what is the distribution yield? I like to keep things simple, and these are my recommendation when you start setting up your ETF portfolio. Simply pick 2 or 3 ETFs to begin with, and you can blend them with individual stocks if you want. But I think having 3 solid ETFs will make you wealthy in the long run. Let's look at some examples of a 2 funds ETF portfolio. I believe you need ETF that invests in the Aussie market that pays good dividend and franking credit, and another ETF that invests in the overseas or US for growth. So 2 funds ETF that invests in the overseas market, for example, IVV, VGS, IOO, or NDQ, and ETF that invests in the Australian market, for example, VAS or VHY. I'm going to start calling IVV VGS as the overseas ETF and VAS or VHY as the Aussie ETF. When adjusting or rebalancing, I would just add more ETF rather than selling your overseas ETF. if it has done well, to buy more of your Aussie ETF as an example. You would only sell if you need the money to fund your lifestyle. Be careful of overlapping ETF. You don't want to buy two ETFs that essentially invest in the same company. Some overlapping, it's fine. For example, you don't want to buy both VAS and VHY as they're investing in the same Aussie companies, the big banks and the big miners. So just pick one, VAS or VHY. Some people like to invest in Europe or Asia by having separate ETF. But my view is you can pick a single ETF that invests in Europe, Asia, and America rather than having separate ETF. How about bonds, property, gold, or Bitcoin? My view about bonds and property is you don't need them. You get better return investing in an Aussie index ETF. And you want to hold some cash in a high yield saving accounts instead. How about gold? Yes, you can buy some gold ETF if you think gold can keep on going up. Bitcoin. You can buy some Bitcoin ETF, but it should only form less than 5% of your overall portfolio, as it is extremely risky. You just have to have a look at the Bitcoin chart. Don't forget to reinvest your distribution and buy more of your favorite ETF. And you'll be surprised that one day, in the longer term, your distribution can surpass your salary or wages. I hope you enjoyed this video. I promise you, investing in ETF has changed my life for the better. And I hope you find this extremely useful. Please remember, this video is only for educational purpose only, and always do your own research. And happy investing.